Hey everyone, welcome. If you're running on NetSuite and your revenue is starting to get, well, complicated, then you've definitely heard whispers about the Advanced Revenue Management Module, or ARM. So today, we're going to pull back the curtain and unlock it. We'll dive into what it is, how it actually works, and maybe, most importantly, help you figure out if it's the right move for your business. All right, let's jump right in. Okay, so here's our game plan. First, we're going to talk about the problem that so many growing companies run into, that big revenue recognition headache. Then, we'll introduce ARM as the cure, the automated solution. After that, we'll pop the hood and see how the ARM engine actually works its magic. Then we'll get real about the payoffs and the pitfalls, the good and the bad. And finally, we'll wrap up with some expert tips to make sure ARM actually works for you.
You know, when you're just starting out, revenue feels pretty simple. You sell a thing, you book the money. Easy. But as your business grows, that beautiful simplicity just evaporates. Suddenly you're dealing with subscriptions, project milestones, complex contracts, and that spreadsheet that used to be your best friend is now a massive bottleneck that's ruining your month end. So does this sound painfully familiar? Juggling a dozen different revenue waterfalls in Excel, manually keying in journal entries every single month. The whole thing is fragile, it takes forever, and let's be honest, it's pretty scary when the auditors come knocking. This exact pain is what sends businesses searching for a much, much better way.
Okay, this slide right here, this is the core concept you have to get your head around. It's everything. Sending a customer an invoice, that's a billing event. It's about getting paid. But actually earning that money and booking it on your income statement, well, that's a totally separate accounting event. The timing is often completely different. The second you truly separate those two ideas in your mind, you're ready for advanced revenue management.
And here are some classic examples of where this all plays out. Think about it. You bill a customer once a quarter, but you're delivering that service every single month. You have to recognize that revenue monthly. Or maybe you get a big check up front for a huge project, but you can only recognize parts of that revenue as you hit specific delivery milestones. And the classic, the annual subscription. You get all that glorious cash up front, but you've got to earn it bit by bit over the next 12 months. And on top of all that, you've got the fun police, ASC 606, which has very specific rules about how all this needs to be done. So you've got this messy, manual, complex headache. Inside NetSuite, the answer is ARM. And we're not just talking about speeding things up a little bit. No, this is about building a systematic, automated, and totally auditable machine that handles your revenue for you. So, what is this thing really? At its heart, ARM is a module built for one job, to do all that heavy lifting. It automates your revenue forecasting, how you recognize it over time, how you reclassify it between different accounts, and how you prove it all to your auditors. The whole point is to take human hands and human error right out of the equation. When you boil it all down, ARM is really making you 4 big promises. Number 1, automation, so you can finally escape spreadsheet hell. Number 2, compliance, because it's built to handle the tricky rules like ASC 606. Number 3, scalability, so you can double your sales without having to double your accounting team. And number 4, and this is a big one, auditability. It creates this perfect, crystal clear trail that auditors just love. And look, this quote from NetSuite expert Mike Kackline just hits the nail on the head. When you can sit across from an auditor and say, the system generated this based on the rules we set up, nobody touched it manually, your audit becomes so much smoother. That peace of mind alone is one of the single biggest payoffs of using ARM. Okay, it sounds great in theory, but how does this thing actually work? Let's go inside the revenue factory and follow a single sale on its journey, all the way from the initial sales order until it lands as recognized revenue on your P&L. It all follows this really clean 4-step flow. First, it kicks off with a source transaction, usually a sales order or an invoice. As soon as that's created, ARM automatically makes a special record called a revenue arrangement. Just think of this as the master contract for that sale. From that arrangement, it then generates the specific revenue plans for each item you sold. These are the actual schedules. And only at the very end of the line does it create the revenue journals that post to your general ledger. Now, this table is absolutely crucial to understanding how ARM works without making a mess of your books. And this is the really cool part. Check this out. The first 3 records, the arrangement, the element, the plan, have 0 impact on your general ledger. None. They're just ARM's internal paperwork for tracking the what and the when. The only thing that actually hits your GL is that final revenue journal entry. That separation, that's the secret sauce right there. It keeps everything clean. So you might be asking, where does all this amazing automation come from? Well, it all comes back to this one thing,
your item record setup. This is the brain of the whole operation. For every single item you sell, you define the rules right here. Do we start recognizing revenue when we build a customer or when we fulfill the order? Is it a straight line schedule over 12 months, or is it based on milestones? Getting this set up right is the foundation for absolutely everything. You set the rules once, and IRM will execute them flawlessly thousands of times.
All right, let's get real for a second. Like any really powerful tool, ARM is not a magic wand. It's so important to go into this with your eyes wide open, understanding both the incredible upsides and some of the common pitfalls you can run into.
So on the plus side, you get that incredible automation, the scalability, that audit-proof trail we've been talking about, all huge wins. But then you've got the minus side. The implementation is genuinely complex. This is not something you want to DIY. When things go wrong, the system's error messages can be, well, pretty cryptic. And because ARM uses all those special records we just talked about, building custom reports and just searching for stuff can be, as one expert put it, a little dicey. Okay, let's talk debits and credits. When you first bill a customer for that yearly subscription, RM debits your accounts receivable and credits a liability account called deferred revenue. Just think of that as revenue we haven't earned yet. Then, like clockwork each month, RM creates a journal that debits deferred revenue and credits your actual revenue account on the income statement. It's systematically moving the money from the balance sheet to the P&L as you earn it. It even handles the reverse, where you earn revenue before you can bill for it, using an asset account called unbilled receivable. RM manages this whole dance for you.
So, knowing all the good and the bad, how do you actually make sure this thing is a huge success and not a huge headache? Let's wrap up with 4 key tips that come straight from experts who have been in the trenches implementing ARM. All right, tip number 1, and this is non-negotiable. Hire an expert. Work with a consultant who has done this before. Period. Second, spend a ton of time upfront planning your item record setup. Get it right from the start because it's the foundation of everything. Third, make sure your building process is rock solid before you even think about automating the revenue that comes from it. And finally, a really practical tip, run your ARM jobs a few days before the month officially closes. This gives you a buffer to find and fix any little errors without the crushing pressure of a hard deadline.
And that really brings us to the big question you need to ask yourself. Take a hard look at your current revenue process. Is it built to handle where your business is going next year and the year after that? RM is an incredibly powerful, scalable engine, but it is a major undertaking. Our goal today was to get you a much clearer picture of what it is, how it works, and what it really takes to unlock its full potential.